If you're over 50, listen up. Investor Kevin O'Leary, Mr. Wonderful, has a pretty critical warning for you. He says there are 5 specific investments that financial advisors might be pushing on you right now that could literally destroy your retirement. So let's break down exactly what they are. And this quote, it just gets right to the heart of it. See, when you're over 50, the stakes are just completely different. They're so much higher. Unlike a younger investor, you just don't have the time to bounce back from a huge financial mistake. Every single dollar you lose could be a dollar you never ever get back. So you have to ask yourself this tough question. Are you making one of these catastrophic mistakes right now? Because honestly, what you don't know could put everything you've worked your entire life for at serious risk. And this all boils down to one fundamental rule that completely changes after you hit 50. Time is no longer on your side. In fact, it can be your enemy. The strategies that worked great for you in your 20s and 30s, they can become incredibly dangerous now. This slide just lays it out perfectly. It's like 2 different universes. Over on the left, you've got a 25-year-old. They've got decades to recover from a big market hit. But on the right, for someone who's, say, 55, the goal completely flips. It's no longer about hitting home runs, it's about protecting every penny you've built. A 50% loss at this age isn't just a setback, it's a permanent, life-changing disaster. And here's a harsh truth from O'Leary, and it's a tough one to swallow. The financial industry knows you're worried about retirement. They see that nest egg you've built, and way too often, they exploit that fear to sell you products that are great for them, but not so great for you. They're designed to move wealth right from your pocket into theirs. So with all that in mind, let's get right into it. Let's break down the 5 specific investments O'Leary says you absolutely have to avoid. These are the traps that can derail decades of your hard work. So here's our roadmap. We're going to tackle each of these retirement killers one by one, and I'll explain exactly why they're just so dangerous when you don't have that runway to recover. Let's dive in with number 1. You know how it is. We all hear about the next big thing, right? AI, electric vehicles, you name it. But O'Leary is blunt. When you're over 50 and you try to pick the next Amazon, you're not investing, you're speculating. You're basically gambling that you know more than millions of professionals who have whole teams of analysts working for them. And get this. This number is just staggering. Over 90%, of individual investors fail to beat a simple, boring S&P 500 index fund. The odds are just overwhelmingly stacked against you. And if you bet big on a hot stock that crashes, you don't have 10 or 20 years to wait for it to maybe come back. Okay, next up is the one that gets all the headlines, crypto. O'Leary's take here is crystal clear. If you're over 50, you should have no meaningful amount of your retirement savings in cryptocurrency. Period. End of story. The volatility is just off the charts. He calls it a young person's game. And that's the perfect way to put it. It's for someone who can truly afford to see their investment drop 80% and not have it totally wreck their retirement plans. For someone near retirement, a drop like that isn't just a bad day. It's a catastrophe you may never recover from. Now, number 3 is a really big one because it often comes disguised as being safe. We're talking about high-commission annuities. These are sold all the time to older investors who are understandably afraid of market swings. But the dirty secret is they often enrich the advisor at your expense. You want to see just how damaging these commissions can be? Look at this number. On a $500,000 investment, it's not uncommon for an advisor to pocket an 8% commission. That's $40,000 of your money gone, vanished, before you've earned a single penny. Oh, and the trap gets so much deeper. Your money is often locked up for years with these massive penalties if you need to take it out early. And on top of that, the guaranteed returns they promise are often so low, they can barely keep up with inflation. All after you've paid that huge fee right off the top. This next one is for anyone who's ever been tempted by those promises of quick, easy income. Leverage products and options trading. These are like financial dynamite. They are complex tools for professional day traders, not for your retirement account. They are a fast track to ruin for almost everybody else. This chart shows you exactly why this stuff is so dangerous. These products amplify everything. So yeah, a 1% gain can become a 2% gain, which sounds great, but a 1% loss becomes a 2% loss. Over time, this constant amplification plus something called time decay can just eat away at your money, even if the market is basically flat. It's a risk you simply cannot afford to take. And finally, number 5. This one might actually surprise you, real estate. Now, we're not talking about your own home. We're talking about the idea of becoming a landlord in your 50s or 60s. O'Leary warns that what looks like a path to passive income on TV can quickly become a cash-draining, stressful nightmare. I mean, the TV shows make it look so easy, right? But the reality of being a landlord is often brutal. Real estate is illiquid. You can't just sell it in an afternoon if you have a medical emergency. It's also a job. You're dealing with tenants, toilets, and repairs. One new roof or one bad tenant can wipe out years of profit. And if you sink all your money into one property, you have absolutely zero diversification. Okay, so we've covered a lot of things not to do. It might sound a little grim, but here's the good news. There is a clear, simple, and really effective alternative. O'Leary's solution isn't about getting rich quick. It's about staying secure for the long haul. And here it is. It's not sexy. It's not going to make you the star of the next cocktail party. But you know what? It works. A simple, diversified mix of low-cost, broad-based index funds, some bonds for stability, cash for emergencies, and maybe some quality dividend stocks. The goal here is simplicity and protection, plain and simple. At the end of the day, it's about this: building a financial foundation so solid that you can actually sleep at night. It's about protecting your principal, making sure your money is at least beating inflation, and just having peace of mind. Successful investing after 50 isn't about how much you make, it's all about how much you keep. So, how do you make sure you don't fall into any of these traps going forward? Well, O'Leary boils it all down to a final test. One single question you should apply to every single investment decision from now on. This quote really says it all, doesn't it? The game has completely changed. Your goal isn't to hit home runs or grand slams anymore. It's just to make it to the finish line with enough money to live with dignity. You win by avoiding the big, stupid mistakes, not by chasing huge returns. And this is it. This is the final, crucial question. Before you make any investment, no matter what it is, ask yourself this: can I afford to lose this money? If the answer is no, then you just shouldn't be making that investment. It is the ultimate test to protect the future that your 70-year-old self is counting on you to build today.